Hi guys, welcome back to the channel. In this video, I will tell you what the current sentiment is like in the junior resource market right now and where the junior miners are in the fear greed cycle. I will also explain the old saying of stocks are climbing a wall of worry and how to apply it to the junior resource market. So here's a chart of the fear greed cycle that all markets follow. I find the junior resource companies are really a lot more sentiment driven than other markets, though. So I'm always trying to find signs in the junior market that the sentiment might be turning. So we're still in the skeptical phase, I think, of the market, but we've seen the advanced juniors rally and they're starting to pull back now. So I think we're coming out of the trough here of the market and we're going to do the next uptick into the early stage juniors. And the reason why these early stage juniors haven't been bought yet is that I think the market is just very gun shy after a long decline in the sector to buy anything that's considered remotely risky. A lot of these early stage juniors too have smaller resources on them, or the grade isn't quite as high as what I'm calling some of these more advanced juniors. So we'll take a look though at a few of these advanced names that have rallied already. Galway Metals is one of them. They're a gold explorer with a resource estimate on two of their properties. Galway has well-known management, and the grade of their deposits is very high, and that may have caused investors to jump into this name, creating a rally in the share price from 25 cents to 80 cents. And I mentioned before in another video, projects that have grade and size or are more advanced tend to have a bellwether effect in signaling that the sentiment of the market is turning from pessimistic to optimistic. So another company that has rallied is Equity Metals. It's a silver exploration company with a high grade resource estimate on their property. So this high grade, along with strong management, may have enticed the skittish investors right now in the resource sector to buy into this name. And it's currently pulling back as well here. Sych Copper has an extremely large copper resource and also has good management. So this large resource, it's 1.4 billion tons. It sparked a rally from about 6 cents to about 24 cents. And now it's pulled back. It's actually trading around 9 cents right now. So those are three more advanced stage projects that have rallied and then have had the pullback coming out of the trough of that fear greed sentiment in the junior resource market. So we'll look now at some more early stage explorers that are at or near multi-year lows. So Core Assets is an excellent company that is doing really everything right. They have a large mineralized footprint for their silver lime project, which they tried to demonstrate to the market via extremely large step-out exploration. The market, however, simply did not respond to any of these moves by the company, and the stock is currently making new lows just recently. The market seems to be too skittish to buy a more recent drill story like Core. They don't have a resource estimate yet either, so that may have contributed to the lack of buying in this name. So Core Assets has a very large CRE, superficial mineralized footprint. That's a carbonate replacement deposit. And it's shown in the red circle. That smallest white ellipse called the Taylor deposit is going into production right now. So Silver Lime's footprint is several times bigger than that Taylor deposit. So Silver Lime looks like it's big enough to become a producing mine. Also, Core Assets has had some good drill results. In hole 28, they intersected 6.4 meters, grading 159 grams per ton silver, 8.7% lead, 7.7% zinc, and 0.23% copper. And that was from 27 meters, so very shallow. Also, another good hit was in hole 48, 8 meters of 139 gram per ton silver, 3.5% combined lead zinc, and 0.18% copper, and that was from surface. So another sort of beat down name here in the sector is Lahontan Gold, and it is a gold restart story. They do have a small resource of 850,000 ounces of oxide gold that the company wants to fast track into production. They also have 1 million ounces of sulfide gold, not currently in the PEA. And when they did release that PEA, the market did not like it. The numbers weren't that bad, but the market wasn't really in the mood for mediocre results like in the PEA. So they really hammered the stock down. I think it was an overreaction. So really, I think just also the amount of gold they want to put in production is quite small, which could be why the market has sold this one down and views Lahontan as too risky. Pacific Ridge is a quality copper explorer with some fantastic drill results on 3 of their properties. So despite these consistently good results, the stock has been going lower. And so we'll look at their Clayule property, and they did have a nice hit in hole 37 of 316.7 meters of 0.79% copper equivalent. They've also spent more than $14 million on Clayule since 2020. And they do have a mineralized extent of their main zone, which measures 760 meters by 600 meters by 650 meters vertical depth, and it does remain open. And that they did do a ZTEM survey, and that suggests that only one part of the system has been tested, and much of it remains undiscovered and hidden to the north. So lots of room for expansion at Clayule. On their RDP property, where they spent more than $4 million since 2022, they had a drill hole. In drill hole 5, they intersected 107 meters of 1.39% copper equivalent, so very high grade. And that was one of the best hits in BC in 2022 for a porphyry, copper porphyry. So these 3 last early stage companies seem to be down and out. Nothing they are doing is working, but this is when, ironically, they tend to bottom and rally. This is the old saying of a stock starts climbing a wall of worry. The share price will actually rise off this rock bottom when there seems to be no hope, and investors have completely given up. These early stage, smaller, lower grade resource companies that have not rallied yet actually will have more upside potential, but are more risky compared to the higher grade, bigger deposits. So they're more risky compared to the more advanced stage explorers. So I do own shares in all these companies. Please do your own due diligence. This is not financial advice. Thanks for watching, and we'll see you in the next one.